We are here, we are here, we are here. Amazing day, everyone. This is Cam Jones, FX Daily Analysis Overview. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family over at Global's Traders Elite on Discord, this is for you. Families and friends will prosper. Let's get back to it. Alright guys, today is 12/12/2020. The pair we'll be looking at is NZDCHF. So let's see what we see in this market. So let's grab our red marker, our red brush, and let's start marking some stuff up. So with NZDCHF, the market started around 2008 in September, and what we see is a straight drop down to the bottom that created lower lows in February of 09. The market came back up. It passed higher highs from previous years, went up to about, May 2010, created higher highs. The market tried to come back down, so it didn't come back down fully, but it came back down, say 35% of the way. But then we see a few lines here, and we'll break that down for you in a second after we finish everything up. So market did end up shooting all the way down, but it wasn't steady to stay. Ended up coming back up, created higher highs, back again in 2012, close to previous years higher highs of 2010. The market retested the higher highs of 2012, wasn't able to break out higher, came down, ended up coming right back up to reach higher highs once again. I say twice again. One back in July of 2014, the other one back in June of 2015. The market ended up pushing back down with a little bit of retest, came all the way back down to reach lower lows as of previous years of September 2011 and March 09. So the market wasn't able to push down past in previous years, came back up once again, wasn't able to reach higher highs of previous years, came up short, ended up rallying back down, all the way back down, actually past all the lower lows from previous years. So past the lower lows from 2015, past lower lows from 2011, past lower lows of 2019. Market got pushed down a little more, came back up, and this is where we at right now. The last candle is that red candle. That's what price action is currently at the moment. So I'm going to erase my screen once again. Well, I'm going to erase my screen. So we have a strong areas of stability. We have a strong area of support here, one. Now, this is, to me, this is not considered a strong area of support. And the reason why is because the market came up, came back down, but didn't come all the way down. It stopped right here. Something pushed the market down. So we see this green line here coming down, and then we see a few other lines coming down here. You see another red one, a green one. We see a long red one that pushed all the way back down to previous years. But this wasn't here to stay. This could have got pushed down for the moment and then shot back right back up. Same here. So this is kind of where the stability of the support stopped in this area. and the market was able to push down further, wasn't able to sustain the hold, and the market went back up. So it actually stopped right here, and then you looped up again, came back down. It sustained another hold here, but the market pushed down, wasn't able to hold here, and it came right back up, and this is where we at again. I'm going to erase my drawings again. So what we can see is, even though the market pushed down, it wasn't able to hold, and pushed down here, wasn't able to hold, and actually held here. This shows that this area one, two, three, and four, straight support. There's a strong support where the market came down, wasn't able to break, came down again, can't break, bounced around up top, came down, wasn't able to break, came back down once again, wasn't able to break down. So from back in 2010 to 2020, the market tried to break through lower lows, but definitely retested lower lows 4 times and wasn't able to have a breakout. So what we're going to do is we're going to head over to the weekly, and we're going to figure out our overall trend. So on the weekly, it looks similar to the monthly. We still have our 4 areas of strong support, 1, 2, 3, 4, wasn't able to break through, but we're going to concentrate over in this area here where price action is. The price action candle that's currently in play is this green one right here. So what we do is, we already know this is the 4th touch it had in years. So what we're going to do is, we know that the market wasn't able to break that support for the 4th time. So we do know this area here is our lowest low. If we go back to the monthly, we know previously to the left it wasn't able to break this. Okay, so we do know, because what we see is that the market came down, created lower lows, and then went right back up. So what we do from there, we will grab our trend line, and we have to find that overall direction. So the overall direction is up. So up is the overall direction. We're going to come over this way, and we're going to take a look at if the market kept pushing up. So we have 1 touch here, we had about maybe a 2nd touch on the trend line, but definitely a 2nd touch here. So 2 touches on the trend line, maybe a 3rd one coming up in this area. If not, the market's going to break up and move up forward and probably kind of retest somewhere here in this area. Maybe, maybe not. At the end of the day, we're going to wait till the market do what? We're going to wait for the market to do what it do. So we don't predict the market. We wait for the market to do what it do. So we can have an idea what the market's going to do, but don't mean it's going to happen. Because why? Because it's a waiting game at the end of the day, and all we have to do is wait to see what the market's going to do. So if I had to choose another area of our uptrend, of saying, hey, if this is an uptrend, and we had to choose an area of where the market may go, so price actions here, the next area of a breakthrough, or it can break through, it's trying to break through this area here. So the market is trying to break through this area here. The next area would probably be somewhere here. If we had to add one more for the uptrend, it will be somewhere here. So we can see that the market created lower lows, came up, you know, it didn't touch, but if I pull down a little bit further, you can see it touched. Okay, because if we would have took it from the bottom up, we probably would have got out here, or I would have got out here, so we would have got out here. So if we would have seen this candle, so we would have known what it was, and we would have got out to trade. So the market rallied back down, came back up, touched the resistance again, and now what we're doing is waiting for that breakout. So if I had to add more support areas in this area of, you know, I know it's an uptrend, but you never know, the market may turn around back around and may want to come back down and retest lower lows again. So if I had to place an area of another support to say, hey, if the market broke down, where would it break down from? It will, you know, price action would probably break through this trend line to touch this support area, and if it broke down another level would probably be here. If it had to go to this final level, if the market came down, stood there as steady, or even if the market came down and it pushed all the way to lowest lows and it came back up and created some type of stability any area they wanted to, this would be like probably the lowest area it can be. It possibly, you know, wick, I mean, this wick right here came here. If this would have came down, the wick could have been further down. It could have been down here. You never know. But right now we're going to sit here and say, okay, if the market does rally back down, it'll end up going to previous lower lows areas here. But for right now, we do see that uptrend. So I'm going to draw up a little bit. Market came down, created lower lows, came up. So you see how it bounced perfectly into my support and resistance, kind of consolidated, came back up, couldn't break through, came back down to support, came up again, hit support again, rode that trend line up, hit resistance, and now it's trying to figure out what to do. So it's a chance that the market can, where price action is that green candle, it can come up, break through resistance, and then finish itself up, probably doing something like this, and then riding its way up to the top here. If not, the market also can probably come up, come back down, hit that trend line, and just ride it all the way up. And then from there we go then. So for right now we see an uptrend, so we'll probably try to take that uptrend, or we will take that uptrend for the ride. So if we caught entry somewhere here and we would have rolled it up to the next area of our resistance, which would be our TP, take profit, that would give us a total of 184 pips. If it broke through this area of resistance, it headed all the way up to the top, maybe with some consolidation as it may shift over to the right side and then move up. It would give us a total of 527 pips. So we're looking at about 527 pips. And if it went up further, then we can, you know, add more resistance lines or more resistance areas to say, okay, you know what, the market is going up. It is riding that trend line. So let's take it up further. So we'll add on resistance line. But for right now, let's just keep what we have. So we see that the market goes up. It's going to go in that direction about 500 pips. If the market comes down, let's say we you know, it breaks our trend line, we may want to wait until it hit resistance. If not, you know, you probably want to take it where it is in between, you know, resistance to support. Find the trade, take the trade, ride it down from here. So if we wrote the trade down for the next area, if it was a downtrend, or if it broke our uptrend and came down, that would give us 209 pips. If it broke down our support again, it will go to lower lows. So we know that the market push down all the way down to the bottom. We don't know if the market's going to do that again. If it turned around, if it did, that would give us 633 pips. But like I said, that was where the market pushed down at. If it came down on its own with no long wicks, no extra stuff, what I mean by extra stuff is extra wicks behind it, the market being pushed down, if it was candle to candle, body with body, it'll probably can stop here, maybe a little lower, you never know. Got to keep your eyes on the market. That will give us a 418 pips. So if the market breaks our trend line and go to the next level of resistance, I should say the second level of resistance, that will give us a total of 215 pips. Break through that, that will give us a total of 608, 600, somewhere around 600 pips if it breaks through and create lower lows. And then from there, we will have to see if it's going to create lower lows from the previous years and go further down to create brand new lower lows. If not, the market just may go back up and try once again to reach higher highs. Okay, so that's NZDCHF. So the last time we was here, we was working on Forex pattern sheets. The last pattern we was left off on was a triple bottom. So we finished up the triple bottom last video. We're going to scroll over to the bottom left and we're going to finish up the last few lines. Or the last line, which is the last few areas. So let's see what we have. We have a rectangle, bearish. So what the market basically did in this area here, the market came down from somewhere, created that support, came back up, hit a resistance, came back down again to create another support, which was the same level as 1, as we can see. So 3 is the same level as 1. 3 wasn't able to break through the resistance, came back up to, let me take that back, said a few wrong words. So the market came from 2 to go back down to support, wasn't able to hold to come back up. I mean, was able to hold, wasn't able to break through to come back up to number 4, which is the resistance, and is the same area of level of resistance of number 2. The market hit resistance, wasn't able to break through to create higher highs, came down once again for the 3rd time for another touch of support. Once it hit support, the market broke through previous areas of 3-1, which was strong area support, as we thought was strong area support because we had that breakthrough. The market broke through, and what we see in that, the market retest to drop straight down. So the next pattern is the flag pattern. Flag pattern. So this is the bearish flag pattern. So what the market did, came from higher highs, reached a level of support, came up, hit a little resistance, came back down, didn't fully go all the way back down to support, came about midway, went back up to resistance, broke previous areas of resistance. So if you put an imaginary line where 2 went from this line here to come down, to come back up, broke through areas of previous resistance to create new resistance space. So it created a new resistance area to come back down, try to, look like it made it to about close to the area of the previous resistance. It could have touched, could have got close, and then what it did, the market stopped at 4, it then broke straight down. So that would be the bearish flag pattern. So next one we'll be looking at is the pennant. So this is a bearish pennant. So with a bearish pennant, the market comes down, bearish meaning down, bullish meaning up. So with the market came from up somewhere, dropped all the way down, created support at 2, pushed up, created a resistance at 3, tried to push down again to lower lows where 2 is located, wasn't able to reach the level 2 again, looked like made it about 75% of the way, to come back up another quarter of the way, but wasn't able to reach previous resistance of 3, to try to come back down once again to previous areas of support, broke past previous areas of support, not one, but twice, and then it's gone straight down. Next pattern we're looking at is the double top. The double top is a bearish pattern. With the double top, what we see is this. The market came from down somewhere, came all the way up, created a resistance. The market came back down, created a support. The market came all the way back down to hit the same area of previous resistance, to come right back down to the same area of support, to break through the area of support, to retest the area of support, to drop straight back down. So if we look over to the last pattern, which is the triple top, it's a bearish triple top. So let's see what we see. The market came from lower lows, or I should say came from the bottom, from somewhere, came all the way up, created resistance, came back down to support, came back up again, once again to resistance, held on the same level as previous resistance, tried to come back down to support of 2, wasn't able to reach 2, it shortened itself about halfway, to come back up to resistance, to come back down to support, to break through to support, to retest the support area, to go all the way down. And that creates a triple top. So we see 1, 2, 3. So let's go back to NZDCHF. So I'm going to look in this market to see if I see any patterns. We're actually on a weekly. Let me check up on a monthly first. So I see something on the monthly, but I'm going to dial down to the weekly so you guys can see it probably with me. But matter of fact, let me circle these areas first so you guys can probably see what I see. So I see an area, I see a pattern, I think I see a pattern here. And I also see, I think I see a pattern here. Let me see up top. Probably something here. So these 3 areas here, let's go down to the weekly to see if we can see a little more clearer. And which we kind of do, or at least I do. So I'll break down to you guys what I see. You probably can see it too. So, you know, for the past 2 days, we've been going over patterns. Okay, so let's start with the last one with near price action. So what we see here, it looks like a W, but is a this will be the ascending W. So the market came down, came up, came back down to come up, and that's the W. Boom, 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 boom. And actually we see another W here, looks like. So right next to it. Let's change the color to blue. And we see, oh, I messed that up. That's not working out right. So let's do the same color, and I'll change it later. So we got a W here, and we got another one here. So 1, 2, 3, 4. Boom. Got 2 W's in the market. Now we can probably change the color. Let's see if it works. Bingo. So now we can see our W patterns here. So when you see a double pattern, a W, what the market's going to do, go up. And let's see what we see over here in this circle. You guys can probably see it. I'm going to put this in nice. Let's put this in blue. So the market came down, came back up, came down once again to come right back up. What we see a W pattern. And what happens when we see a W pattern? That means the market is going to do what? The market is going to do what? The market is going to go up, which it did. The market came down, created support, came back up, to hit support once again. Looked like the market got pushed down to the trend line, and then the market consolidated a little bit, and it created the next level of higher highs, and it consolidated over. And all we just see is a whole bunch of consolidation until it the market went right back down. So we can see a down angle here. So this is, it created higher lows, okay, to where the market went back to previous lower lows. Let's see what else we see. So I circle this area here on the monthly. On the monthly, it looked like something, but on the weekly, it looked like a whole bunch of nothing. So, you know, let me go down the time frame one time. Okay, so the weekly and daily looks the same in that area. I'm gonna go back to the monthly. I want you guys to kind of see what I thought I seen in the monthly. Maybe, maybe not. So I thought I seen a M pattern, which I do. I think I see it. So I see it. I think I see it. I see the pattern on the monthly. So the market came up, reached higher highs to come back down, to reach back up, to come back down. What we see an M. When we see an M pattern, that's the market exhausting itself, trying again, wasn't able to break. It actually broke the resistance because you can see higher highs. So you can see that this area is higher in this area, but it wasn't able to go up further, so the market went right back down. So when you see an M, the market's probably going to come back down, and that's what it did. The market broke through, came back down, went up just a little bit, but didn't really go up to previous support. This is like more like a retest. It looks like a retest of this area here. So the market came down to retest previous areas to break down further. Alright guys, this is Cam Jones. We just marked up NZDCHF. Thank you for watching. I will see you.